Hello, welcome to European Open Briefing for Wednesday, October 3rd. I'm Rafa Barajan, currency analyst at xm.com, and we're going to be taking a look at what's happening in the currency markets today. So there's quite an improvement in risk appetite this morning. Yesterday, of course, we had those concerns about the Italian budget deficit dragging market sentiment significantly lower following the boost on Monday from that surprise NAFTA deal. We're seeing the dollar pull back a little bit, the dollar index down by around 0.15% this morning as the dollar loses some of its safe haven appeal. The yen is also broadly weaker this morning, so that's supporting dollar yen close to the 114 level. It had reached 11 months high on Monday. The euro has rebounded from yesterday's 6-week lows, so there are reports that the Italian government is now planning a much lower deficit targets for 2020 and 2021 in order to get the EU's support for its plans to increase its budget deficit to 2.4% in 2019. The euro is currently trading just below the 1.1580 level against the US dollar. Sterling is also benefiting from the euro's rebound. It's recovered to around the 1.30 level. So we've got the Conservative Party conference going on at the moment. So although for the time being there doesn't seem to be any leadership challenge for Theresa May, and most senior ministers appear to be standing behind Theresa May's Chequers plan. There are rumors that many Conservatives want Theresa May to stand down before the next general election, so that could potentially come back to haunt sterling if those rumors intensify. The Australian and the New Zealand dollars not really seeing much benefit from the risk-on sentiment this morning. There was poor data out of both Australia and New Zealand over the past days, so we're seeing the Aussie struggling. It's down by 0.25 percentage points, around 0.7165 at the moment, and the Kiwi down at 0.6571 against the US dollar. The Canadian dollar is once again faring much better than its other commodity-linked peers. We're seeing the loonie hold near 4 months highs following that NAFTA agreement, currently trading at 1.2829 to the US dollar. Commodities are doing well this morning. Gold is extending yesterday's gains. Yesterday, gold prices jumped to 1.5 week high, benefiting from that concerns about the Italian budget and which risks plunging the Eurozone into a fresh debt crisis. Oil prices are also up again today. WTI currently trading around $75.38 a barrel. We've got the US inventories numbers coming up later today, so those will be watched closely. Looking at equities, major European indices are up this morning on those reports about Italy's budget. Looking at the main performers now, we can see the euro is the best performer both against the yen and the dollar, and Aussie and the Kiwi are underperforming along with the US dollar. Let's take now a closer look at the dollar index. We can see those 6-week highs yesterday above 95.7. It's now eased to around 95.30. Dollar yen holding between 113.5 and 114. So we had very upbeat remarks by Jerome Powell yesterday, the Fed chair, at a speech. He said that the US economic outlook is remarkably positive. He will be speaking again later today. We're also going to have the ISM non-manufacturing PMI, the ADP employment report ahead of that Friday's official jobs report. If, as expected, wage growth figures do pick up at the end at the jobs report on Friday, the dollar perhaps could see a bit of a rebound. Let's now move on to the euro. We can see significant rebound from yesterday's lows when it came close to breaching the $1.15 level. It's now recovered to around 1.1580. So there are reports that the Italian government wants to bring down the deficit from 2.4% to 2.2% in 2020 and to 2% in 2021. It's not clear whether or not the EU would accept these latest targets. Yesterday, though, the EU several EU officials strongly criticized the Italian government's budget plans, and that sent the 10-year Italian government bond yields to a 4.5-year high of close to 3.5%. So we're likely to see more volatility for the euro in the coming days. And finally, taking a quick look at the Australian dollar, we can see that big slide yesterday after the RBA policy meeting. Although there wasn't much change in the RBA's policy statement, they were a little bit more cautious about the inflation outlook, so that cast doubt about the timing of the next rate hike. In addition to that, this morning we had a big slump in Australian building approvals for the month of August. The Kiwis also had a number of poor data yesterday. Business confidence dropped sharply for the third quarter, and we also had the dairy prices falling once again in the latest bi-weekly auction. Both currencies have slid to 2-week lows, the Aussie touching 0.7160, currently trading just off those lows. Finally, taking a look at what's coming up later on today, we're going to have Eurozone retail sales and the UK services PMI coming up, as well as the US non-manufacturing PMI, plus a number of Fed speakers, including the chair, Jerome Powell. That's it for me. Thank you very much for watching, and have a great day.